Albert Einstein once called compounding the eighth wonder of the world. Why? Because it can turn small amounts of money into huge wealth over time. Compounding simply means your money earns money, and then that money also earns money. It's like planting a tree. At first it's small, but as it grows, it drops seeds, and those seeds grow into more trees. Over years, you get an entire forest, all starting from one seed. Today, I'll show you 8 of the best compounding assets you can start investing in right now. 1. High-yield savings accounts. A high-yield savings account is one of the easiest ways to benefit from compounding. Unlike a regular savings account that might give you almost nothing, like 0.01%, interest, a high-yield savings account could pay you 4% or more per year. Why is that important? Because your money grows while it just sits there. For example, if you keep $5,000 in a high-yield savings account, it could earn you around $200 in a year without doing a single thing. It's perfect for emergency funds or short-term savings goals. Won't make you rich, but it's the easiest place to start letting compounding work for you. Number 2, stocks. Stocks are one of the most powerful compounding assets. When you own a stock, you own a piece of a company, and as that company grows in value, so does your investment. Over the last 100 years, the stock market has returned about 7 to 10% annually on average. That means if you invest $1,000 today and let it grow at 8% a year, in 30 years, it could be worth over $10,000 without adding any extra money. That's the magic of compounding. The earlier you start, the more time your money has to grow. 3. Dividend-paying stocks. Dividend stocks take compounding one step further. These are companies that share part of their profits with you in the form of regular cash payments called dividends. Here's where the magic happens. If you reinvest those dividends into buying more shares, those shares start earning dividends too. That creates a snowball effect. For example, if you own shares of a company paying you $100 in dividends this year, and you reinvest it, next year, you'll earn dividends not just on your original investment, but also on that extra $100. Over time, this builds serious wealth. 4. Real estate. Real estate is another powerful compounding asset. When you buy property, you're building wealth in multiple ways at once. 1. Appreciation. Property values usually rise over time. 2. Rental income. If you rent it out, tenants essentially pay down your mortgage for you. 3. Equity growth. As you pay off the loan, your ownership stake in the property increases. Add those together, and real estate becomes a wealth-building machine. Think about it. Someone buys a house today, rents it out, and in 20 years, not only has the house likely doubled in value, but it's also fully paid off and still generating income. 5. Bonds. Bonds are like IOUs from governments or companies. You lend them money, and they promise to pay you back with interest. They're safer than stocks, but usually offer lower returns. However, the interest payments you receive can also compound if you reinvest them. For example, U.S. Treasury bonds or municipal bonds are often used by investors who want steady, predictable growth without as much risk. They may not double your money fast, but they're reliable and can balance out a riskier portfolio. 6. Index funds and ETFs. If picking individual stocks sounds too risky, index funds and ETFs are the easiest way to invest in hundreds of companies at once. An index fund tracks a big market index, like the S&P 500, which includes 500 of the largest U.S. companies. Historically, this index has grown about 10% a year. That means if you invest consistently in index funds, you're basically riding the wave of the entire economy. And just like dividend stocks, when these funds pay dividends, you can reinvest them to buy more shares, which compounds your returns over time. 7. Retirement accounts. Retirement accounts like a 401k or Roth IRA are special because they combine the power of compounding with tax advantages. For example, in a 401k, you invest money before taxes. That lowers your taxable income today, and your investments grow tax-deferred. In a Roth IRA, you pay taxes now, but all your future withdrawals are completely tax-free. Here's the kicker. If you consistently invest in these accounts, Compounding plus tax savings can turn even small contributions into huge retirement funds. For example, investing just $500 a month into a Roth IRA could grow into over $1 million by retirement. 8. Cryptocurrency. Crypto is the newest and riskiest compounding asset on this list. Coins like Bitcoin and Ethereum don't generate interest on their own, but they've seen massive price appreciation over time. On top of that, there are ways to earn interest on your crypto through staking or lending platforms, where your crypto can actually generate returns similar to dividends or bond interest. Now, crypto is highly volatile. It can go up fast, but it can also drop fast. That's why most financial experts recommend keeping it as a small percentage of your portfolio, but as a compounding asset, it has huge potential if you manage the risk. Compounding is the key to building wealth, whether it's through stocks, real estate, index funds, or even crypto. The earlier you start, the bigger the snowball becomes. Remember, it's not about getting rich overnight. It's about letting your money quietly work for you year after year until one day you realize how far you've come. If you found this video helpful, hit the like button so more people can see it. Subscribe and turn on the bell for more money tips, and let me know in the comments, which of these compounding assets are you already investing in, and which one are you planning to start with? Thanks for watching. Now go plant those seeds and let compounding do the rest.